It has been a volatile week for Bitcoin following last week's halving-fueled rally that saw us climb all the way to the $10,000 mark. Now, the weekend gave way to a giant pullback. Late Saturday evening, Bitcoin retraced nearly 15%, sinking to the low $8,000 levels where we find ourselves right now. And this appeared to catch a lot of bulls off guard. Again, $270 million worth of longs was liquidated on BitMEX alone, and even Coinbase reported an outage as exchanges were slammed when prices tanked over a matter of just a few minutes. Now, investor sentiment has now turned somewhat bearish just hours before Bitcoin's halving event, the event that sees rewards for each block mined by Bitcoin miners getting halved from here on out. But some analysts are even calling for sub $3,000 Bitcoin, a massive pullback, suggesting a retracement to 1,760 as the next possible bottom if Bitcoin takes its next dive. But I don't think we need to panic yet. And I think that Glassnode and some on-chain metrics can actually help us feel a little bit more positive as I've gone over all the positive stuff already moving into this halving. So Rafael Schultze-Kraft, he's one of the Glassnode co-founders. He has made a few bullish cases for Bitcoin's long-term future, writing in a very extensive Twitter thread that was published just earlier today. Now, according to Schultze-Kraft, Glassnode took a long look under the hood in order to analyze Bitcoin's robust on-chain fundamentals, looking back at how much the network has grown since the previous halving that took place in 2016. And we all know what happened just a little bit after 2016. Now, they compiled a list of 10 network-related metrics that point to a compelling case for why you should ignore short-term price swings and have faith in Bitcoin for the long term when you're thinking with your investment portfolio. So, the first thing is the incredible growth of the Bitcoin network. The number of Bitcoin addresses has been on a steady rise and is currently sitting at a historic high. This metric recently surpassed the 30 million addresses mark, which represents an over 234% increase since the previous network halving. Second is the fast growth rate of the network. Schultze-Kraft noted that not only is the Bitcoin network continuing to grow, but the pace of that growth also remains quite incredible. Using network data to track the number of new addresses added to the network on a daily basis helped Glassnode calculate a sort of growth rate for the network at present, which they say works out to be about 68% higher as compared to the cumulative growth rate at the time of the last halving. Number 3, the number of Bitcoin addresses that are holding 0.01 or more Bitcoin keeps hitting all-time highs. So, thirdly, Glassnodes tracked the number of addresses holding at least 0.01 Bitcoin, as well as the number of addresses holding at least 0.1 Bitcoin. Both metrics have been hitting new highs almost every single day this year. Addresses holding at least 0.01 Bitcoin, or about $100 in USD value, have increased by more than 204% since the last halving, while the addresses holding 0.1 Bitcoin, or about $1,000 in dollar value, have seen a 142% increase over the same period. Now, this metric points to a record number of Bitcoin hodlers coming aboard the train. And Schultze-Kraft speculates that investors are putting away Bitcoin in order to hedge against economic uncertainty in the midst of the coronavirus pandemic. Whole coiners. The number of wallets containing at least one Bitcoin is also higher than ever. He moved on to note that the number of wallets containing a balance of at least one Bitcoin has increased dramatically over the years. There are now at least 800,000 addresses holding at least one Bitcoin. People talk about centralization of Bitcoin holdings. Remember, the halving screws this up. This particular metric sets a new record and works out to be about 64% more wallets holding at least one Bitcoin today than there were during the previous halving 4 years ago, meaning that wealth in Bitcoin is not as centralized as we are led to believe. Whales. The number of Bitcoin whales is on track to hit new all-time highs. This report that the number of Bitcoin whales holding at least 1,000 Bitcoin is approaching new all-time highs this year as well. Although the number of whales has not increased significantly since 2016's halving event, the dollar value held by these players comes in at about 10 times higher than what it was 4 years ago. Network activity. There has been a steady increase in network activity. Now, they also point to data showing a continuous rise in the daily number of active addresses as estimated users over the past 3 years. This Glassnodes calculation of network activity is on track to hit the previous record highs that were set in December 2017. You guys know what happened then. Comparing today's network activity data directly to the 2016 halving period shows daily active addresses and users are up 65% from where we were 4 years ago. Volume. Bitcoin's on-chain volume remains constant. Now, we also observe that Bitcoin's daily on-chain volume in terms of the dollar value has plateaued since 2017, suggesting that there is sustained network usage to send and store real-world economic value. The fact that no large increases have been witnessed is a sign that more investors are choosing to hodl, which, according to Schultze-Kraft, bolsters Bitcoin's store of value narrative and argument, because who would want to sell Bitcoin when they could just hold on to it and it's going to be worth more in the future? Hash rate. The Bitcoin mining market is at optimum health. Bitcoin's hash rate, or the amount of computing power directed to secure the network and solve the cryptographic puzzle that produces the next block in the chain, has been growing consistently throughout Bitcoin's entire history. Schultze-Kraft says this only shows that Bitcoin's network keeps getting stronger and more secure, as the network's total hash rate is up a staggering 6,800% since the 2016 reduction to the block reward. Despite the fact that the rewards that miners receive are about to be slashed by half in just a few hours' time, overall sentiment in the mining industry remains extremely positive, and miners do not appear to be abandoning the network or their operations, pointing to a healthy future for the network with regard to miners predicted to ride out short to medium term periods of challenging profitability. The consistency with which blocks have been produced over the years. Finally, Glassnode feels that Bitcoin has been working reliably as it was intended for over 11 years now. In particular, blocks have been produced on average with a surprising constant frequency for the majority of Bitcoin's existence as a network, with a new block found generally every 10 minutes. The network has managed to maintain that steady and reliable rate as set out by its pseudonymous creator, Satoshi Nakamoto, from the very beginning, right? As opposed to other chains that have struggled with finding blocks. BCH, I'm looking at you. The Glassnode study concludes that BTC remains a highly volatile asset, subject to wild price swings in the short term, particularly post-halving, as the next big shakeout of miners takes place. However, Bitcoin's strong fundamentals paint a very bullish picture for price to go up for the leading cryptocurrency in the long term. And as such, Schultze-Kraft's advice is pretty simple. Investors should look at the bigger picture, ignore the short-term price action that is inevitable over the months leading up to and following the halving, but remain bullish for the long-term future of Bitcoin, as we have been here for the last 4 years. So, pretty simple.